Hey folks, Dan Frio here with your real estate news for July 15th, 2025. So this morning we got consumer inflation numbers. It's the one of two-part series we're going to get this week. So today we got the consumer inflation. Tomorrow we got producer inflation. How are those going to affect these things over here? That's what we're going to talk about in today's discussion. Well, today the economic news that came out was the consumer inflation came in. We're going to go over those reports here in a second, but this is actually what happened to the bond market. The bond market got crushed today. So we're going to look at this and also the stock market. It's basically red across the board here other than NASDAQ, which is up because of NVIDIA. We're going to go over why the markets were down today, even with better than expected, I guess, or on point inflation numbers on the consumer level. So let's get to today's news, folks. My name is Dan Frio. I actually do this report twice a day to inform you guys what's going on with those over there and specifically the whys behind it. So here's what happened today. Over the past 2 weeks, we got some information about tariffs and not a lot of information, and we got the big, beautiful tax bill that finally passed. So now what we're looking at is where's inflation going from here because of tariffs. So tariffs, they're supposed to really increase the inflation numbers. So what we want to focus in on is how bad are they going to get? So what we got today was consumer inflation numbers. I wish we would have got the producer inflation numbers that we're going to get tomorrow beforehand, because if you think of inflation coming into our economy, it's because of tariffs. Okay, so why are they going to be, or where are they going to start? On the producer side. So if producer prices start to go up, then you pretty much can say that the consumer prices are going to go up. But the reporting, how it comes out, is we get consumer prices first, and then we get producer prices. So let's get over the specifics we got today to see why the markets might have reacted to this. And tomorrow, what are my thoughts on the PPI, and what if they come in better than expected, and what if they come in worse than expected? So let's get over to it. But first off, I want to go over to right through here. Before I go through the economic calendar with you guys, I want to go over a former Fed official. Now, they're going to tie in a lot of the loose ends on this one. They're going to talk about what the Federal Reserve should be doing with situations they're monitoring, and kind of when they should cut, or maybe how many cuts there should be. So let's go over to this one first. And then when we come back, I'm going to go over the CPI numbers, consumer inflation, then what my expectations are on the producer inflation side, and then what I'm thinking on what's going to happen tomorrow, short-term, mid-term, and long-term for interest rates. So let's get over to it.
Let's bring in former Fed Governor Randy Kroszner, talk about, Randy, maybe the data first. A lot of the coverage this morning sort of hints that we're beginning to see some residue around tariffs on this print. You agree?
So we're certainly seeing a little bit of that. If you look at particular categories like toys, furniture, et cetera, you are seeing a little bit higher inflation than we'd seen in the past. But if you look overall, it's hard to see a big impact yet. And that's the big debate. Is it coming or is it not coming?
Is it because services is acting as a bit of a salve at this point?
Yeah, that's a very large part of what's happening, and the large part of especially CPI is housing services and shelter services that are only very indirectly affected, at least so far, by the tariffs, and we haven't seen really much action there.
So one piece of this that I just want to show you, just so you know, 40% of this number right through here is real estate, the equivalent rents on a property. They've been using a factor in here, I think about a 7% rate. It's actually at 2.3. So when the Federal Reserve or the CPI numbers actually come into basically where we are today, and the housing inflation gets adjusted from 7 to 2.4, you're going to see a major move in this number through here on the CPI. So now the CPI is probably going to go down in some points because of that housing number, but the tariffs also can make it escalated. So that's why we really want to pay attention to the producer inflation. Let him continue.
Really much action there.
Why don't they just cut rates? Because now this is the fifth month in a row where we got below than expected or in line inflation. And then if things get ugly or inflation starts to perk up, then they can pause or raise.
Sure, and I think there are at least a couple of governors who would make exactly that argument. I think the majority is probably going to say, well, let's just wait and see a little bit longer. The challenge is you can keep waiting and waiting and waiting, and at some point you have to make a decision. My guess is that there'll be a reasonable consensus by September to make a move. I don't think you'll get there quite yet. Their preference would be to continue to pause until they start on a more consistent way of bringing things down.
Okay, so here's what he's saying. I think it's what he's saying. The Federal Reserve is going to pause until they really can put in consistent rate cuts, because there's about 100 basis points or 1 full percent that needs to come out of the federal funds rate, and actually the rate that the Federal Reserve controls. Here's what's happened over the last, we'll just say the last year or so. From January of 2024 all the way through September of 2024, the Federal Reserve did nothing, but then in September they cut. They cut rates for the first time in years, 50 basis points. From that day, mortgage rates went from 6.2 back all the way up to over 7%. And they cut 2 more times, and then they've been on pause basically for the whole part of this year. So now what the consensus is from the Federal Reserve is they're saying, okay, well, let's give it a little more time for the tariffs to come into effect. Well, the numbers that we're seeing lately have some of the tariff news built in, not all of them, and the numbers aren't really moving dramatically. I'll get back to him in a second, but here's what I wanted to show you. Here's the only numbers right through here. The CPI year over year and the CPI month over month. These are the only 2 numbers that went up basically or over above what the consensus was or the forecast was. Actually, the CPI month over month was on track. So if you have month over month on track, you have this core on track or below. The only number you have on the CPI year over year, that's the only number that kind of shocked the market this morning. So the market's just waiting for some data to get themselves a pullback because of the rallies that it's had. Well, tomorrow the PPI, this is probably might give us a better nail in the coffin if inflation is here and if it's picking up. So this is on the producer side of the equation. So that's why tomorrow's data that we're going to get is really important. We're also going to get productivity. And then on Thursday, we're going to get more and more in regards to the jobs market. But let's go back to him, because the Federal Reserve, they were in motion there to start cutting. And then inflation raised its ugly head back again in January. And now they're sitting, pausing. So at what point may the Federal Reserve actually cut? I think he gives us a precursor on that. So let's get back to the interview.
That every meeting or other meeting, I think they're likely to cut at not the July meeting, but the rest of the meetings, each meeting for the rest of the year.
So you don't see headline inflation becoming a bigger problem?
So I'm kind of with the way that Chris Waller has articulated things. Yeah. That it's been, this is likely to be a one-off. If you look at, all imports are about 13% of GDP. The tariffs are, they're on, they're off, they're exceptions. And so it's hard to see that it's going to have this enormous impact. And in particular, it's hard to see an ongoing impact. Fortunately, the short-term inflation expectations came down from the elevated levels that they were earlier, and that's really where you have to worry. Does this get into something that is longer-term, more into all the cracks in the system? And at least so far, we're not seeing that.
No.
I will guess, though, Randy, that you're not in favor of cutting 300 basis points.
That seems a little far as I'm concerned. So we'll go a little bit further than I would go, I would have to say. At least at this moment.
This is what the president does, right? He creates a lot of leverage and then they'll cut a little, and then that'll be, they'll find somewhere in between. The one thing, Randy, is that the political pressure on Powell and, the importance of Fed independence. I mean, you can disagree with him on policy, sure, but for them to go after, and it's not clear that they're doing this, but there's some signs, from OMB director, from Kevin Hassett on this renovation nonsense. What would be your thinking on whether, if this progresses, how big of a risk that would be?
So
I'm interested to hear this, because no other president that I know of has really put this much pressure on the Fed, the head of the Federal Reserve. So President Trump is basically adamant about Chairman Powell. He's like, you need to cut rates. And now they're going after him saying, you're not doing your due diligence because you guys spent over, $100 million or something like that in renovations. I think it's kind of getting in the weeds at this point. So let's just kind of end it at that, because I don't really want to get into a political atmosphere at this point. So that's what we're seeing right now in the markets. So there is the Federal Reserve. Are they still going to cut rates in the July meeting, or is there multiple rate cuts coming? Let's go over to the CME FedWatch tool to see how accurate he might be on this. So we're going to go to the probability, and he's saying they're most likely going to cut at every meeting after the July meeting. So in the July meeting, there's a 97% chance they're not going to cut, but this is actually down right through here. The September meeting, this was actually 60-something% today, and it was actually in the 70% range not too long ago. For some reason, now the markets are saying, well, maybe there's not a definite chance that they're going to cut in September like they did last September. So I'm not all fearful of that. What I'm mainly concerned with is how all this data is going to fill over into the bond market right through here. So the Federal Reserve, they do control rates, and they control the front end of the yield curve, but mortgage rates are determined by this bond right through here. This bond is what we call the mortgage-backed security bond. It actually trades on Wall Street. So if you really want to understand what's going on with mortgage rates, you have to focus in on this bond right through here. So this thing gets affected by all the economic news and everything else taking place. So if we go to a one-day chart, here's what happened today. The market opened up with good news on consumer inflation, and then all of a sudden when the market truly opened, it just went down and continued to drop from there. So not really sure. Even the catalyst on, or the announcers on CNBC, there's really no need or reason for this crash. I won't say a crash, this downward trend today, but we're going to focus in now on what's going to happen tomorrow on the producer inflation. So I'll be back tomorrow morning at the opening bell to let you know how this might be affecting these things over through here. So my short-term, mid-term, and long-term goals: short-term, lock them if you get them. So as soon as you get an application in, or if you're an applicant out there, don't try to play the float game unless you're a professional at this. So I would suggest locking in your rate at that time. If you have a little bit of time, maybe 2, 3, 4 weeks until you're closing, you might just want to sit on the sidelines right now, because we got a lot of inflationary data coming out the rest of this week. And by August 1st, we're actually supposed to know what's going on with tariffs. That'll give us more of a pinpoint accuracy on where inflation is going to go with that based on tariff news. So that's that piece of the puzzle. So last but not least, folks, my name is Dan Frio. If you'd like to use my basically 35, 36 years of experience in the mortgage business, I did put it to work for you guys. If you're looking to buy or refinance, I'd love to help, folks. We have a slogan here: one application, one credit pool. We're going to shop your loan over 30 different lenders. Now, how do we do that? Well, first, let me explain who I am and what I do. Folks, I'm a loan officer. I'm a federally licensed mortgage loan officer. That means I'm licensed in all 50 states as well as Puerto Rico. And the reason why is I work at a federal bank. So yeah, I work at a federal bank. But the unique thing about our bank is it's also a large brokerage. Think of it as a federal bank that's also a mortgage broker with over 35 different lenders. So when you put in your application here, you're not only getting rates from my bank, I'm also shopping rates up to 35 different lenders. So when I get back to you, I can basically assure you, you're going to get the lowest one, some of the lowest rates in the industry and some of the lowest fees in the industry as well. So check out therateupdate.com. If you're looking to reach out to me, you can give us a call at 844-775-5626. If you're looking to buy, check out this program right through here. It'll give you up to $7,000 in down payment assistance. If you're looking to refinance, click the refinance tab. It's going to show you how you can provide me. Let me know what interest rate you want. And as soon as that interest rate hits that rate, I'll get you on the phone. We'll get your application started and get you locked in so you don't miss that rate, those low rates again. But if you have already got a quote out there and you're like, Dan, can you check this quote that I got with your 33 or 35 lenders? Absolutely. So all I need you to do is upload your loan estimate right into this tab right through here. It's the loan estimate tab right at the top of here. Just give me your information. I'll do a personalized video for you comparing what you were offered and versus what I can get you. And don't be surprised if we're getting you a lower rate and lower fees. So that's my report for today, guys. Have a fantastic evening. God bless. Be safe out there. And I'll be back tomorrow morning to let you know how the producer inflation comes in and how it will ultimately affect these things over through here. So thanks for watching, guys. Have a fantastic evening. See you tomorrow. Bye-bye.